Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 4th, 2021. I want to cover top cannabis stocks. So with that, we got a couple cannabis stocks here. First one is GrowGeneration, one of my favorites. These guys are into picks and shovel type play into cannabis. Next is Tilray. It's a biotechnology type company. They produce medicinal medicines, in this space. Last but not least is a real estate play. It's a innovative industrial properties. It's again a great company. So with that, we'll cover these and more and see what stocks are ripe for picking. So with that, these are top ETFs, exchange traded funds in the cannabis industry. So we got a couple of them here. First is Tokay. It's as you can see a very small net asset value, just 37 million, and they've done. I think they've done okay for 1 year. They've done 46%. Next is YOLO. YOLO is a little bit bigger, 376 million assets, and they've done about 91% in 1 year. And I think topmost is CNBS Amplify ETF. They've done nicely. They've done about 120% in 1 year. That's a good performance. And then we got a couple more here, THCX and POTX. And as you look through this, if you look at the net asset value here, we got biggest player here with the MJ. They have 1.6 billion dollar under the assets, and I think they've done okay, 40 about 56% in 1 year. And next biggest from an asset perspective is MSOS. This one has done, as you can see, pretty okay. It's 1.03 billion dollars, and they've done about. I think it's a little bit newer ETF. For 6 months, they've done 21%. Not too bad. And as you look at this chart here, one thing that comes across is in 1 day, which is today, which is Friday, and 5 day, and almost if you look at 1 month and 3 month off late, these cannabis ETFs as well as stocks, they're a little bit stalling. So I feel like this could be a good time to pick some good stocks and buy some and hold it for a while, because we don't want to chase the stocks. We want to let them come down a little bit and then buy and hold it for a while. So with that, one more point I'll make is really, if you want to invest in ETF, pay attention to things like expense ratio. As an example, some of these have a little higher expense ratio, like 0.75, 0.75, 0.74, a little bit on the higher side. Keep a note of that, so that way you don't get burned yourself in this expense ratio. That's one of the reasons I kind of look at these ETFs for the trends. I'll pick some of the stocks. You could even look at this ETF and see what these ETFs are holding and buy some of those stocks instead of buying the ETF itself. So with that, let's look at top cannabis stocks here. The way I organized is I got the ticker symbol itself, the company, the stock price, and market cap. Sales is very important to me. What I've done is I've got the sales, which is trailing 12 months, and I got 5 year growth, past 5 years growth, 1 year growth, quarter over quarter growth. That will give you a good idea. Is sales accelerating or is it decelerating? We want to pick the players with the good sales acceleration. And I also have gross margin. It's very important to have very nice gross margin and also net margin. If that's possible. Some companies are really very early stage. They may not have a net positive net margin, but it's good to have good gross margin at least. Debt to equity ratio is again very important. We don't want company to have too much debt on their balance sheet. As you can look through here, many of these companies have got low debt to equity ratio. That's a very good, very good thing to have. Then we got ROE. ROE basically talks about profitability of the company. I like to see double-digit ROE if possible, but at least a positive ROE if possible. Then we got RSI. RSI will tell you, hey, look at the fundamentals. If the fundamentals are good, then look at the RSI. RSI will tell you that a good entry point. Anything below 50 or around 50 is a really good entry point. For example, grow generation. If you look at here, RSI is 50.5 midpoint marker. That's a good RSI. And if you look at the performance here, 1 day, 1 week, it's a little bit lower. And they're 38% off of 52-week high, and they've done nicely for 1 year. Typically, if you look at RSI, the moment stock is off so much from 52-week high, that's why you see RSI to be a little bit lower. That tells you stock is a little bit over sold at this time. It's good to enter into a small position here. So typically what I do is I look at the good fundamental like this and use RSI for an entry point. So if RSI is high, that means stock is overbought. I don't want to enter at the time. But if stock is sold like this here, RSI is around 50 or lower, then I would be a buyer. I will buy start accumulating slowly and build a good position. Next is XXII 22nd century. Just a $4 stock, as you can see here. They're okay. They're about $705 million market cap, and they've done nicely from a sales growth perspective. Quarter over quarter, it's negative sales growth, but overall they've done nicely. And as you see here, gross margin is also okay. Net margin is negative, which is understandable. It's an early stage small company. And as we run through here, they've done nicely for 1 year, 483% performance in 1 year. That's great. And good performance in 5 years also. They are 24% off of their 52-week high, and they've done nicely in 1 year, 6 month, 3 month, all the way to 1 day. They have not had too much downturn here. They've done nicely. Given the stock is very low price, I think it's okay to buy some and hold it for a while. Even though, as you can see here, quarter over quarter growth is negative, net margin is negative, and also ROE or the profitability is negative. Given it's a smaller stock and has got growth ahead of it, I think it's okay to buy some stock and hold it. Next is Tilray. Everybody knows Tilray. It's one of the meme type stock. People like to pump this at times. It's a $18 stock, as you can see here. It's got a good positive growth in a 5 year, 1 year, quarter over quarter. Nice gross margin. I like this. Net margin is negative right now. It's understandable. It's a healthcare company. It's got a lot of investments to make. So with that, ROE is also negative. That means there is no profitability at this point. As you look through here, Tilray, the RSI is above 60. So I would not enter at this time. I would wait for a little more pullback. As you can see here, it's done great in 1 year, 253%, 5 years great again. They're 51% off of their 52-week high. So as you look through here, they have done nicely for 1 week, 2 week, 1 month. So I think right now 1 day they lost some, but I think it's good to wait a little bit and look at a nice pullback and then buy. This is one of those meme stocks. It always bounces back and forth. Next is Chart Industries. They do a lot of things. They also do energy and some equipments, and they also support cannabis industry. It's a bigger stock here, $5 billion market cap. I think this one is good to buy on a pullback and hold it. It's got a nice chart. I think it's a good stock to have. As you can see here, they've done nicely for 1 year, 232%. They're 11% off of their 52-week high. And as you can see here, they've done not so good in last 3 months, 1 month, and they're trying to bounce back a little bit now. I think this one is okay to buy a little bit at a time, and it's a solid company. As you can see here, nice gross margin, nice net margin also. It's good, fundamentally sound type company. As you scan through this, I will not talk about all of these. A couple of my favorites here: IIPR, innovative properties. It's a real estate company. They provide these real estate services to cannabis industry, and I think it's a little expensive from a market cap and a stock price perspective, but they've done very nicely 1 year, quarter over quarter, nice gross margin. I love this, and they've done nicely for 1 year, 108%. They're just 18% off of 52-week high, and right now, as you see here, their RSI is about 51. I think it's okay to open a small position here. So then we got a couple more here. VFF NewAge, same story, nice positive sales growth, and there is no margin yet from a net margin perspective, but they've done nicely for 1 year. And I also like other stocks like Evogene, CURLF, IMCC. They also have positive sales growth for most part. I would be buying them as as a good entry point. As you can see here in 1 day, two of these have gone down a little bit. And if you look at the RSI, which signals us the entry point, that tells us, say, with the IIPR, it's okay to enter, but other two here, a little bit, little bit in the overbought type scenario. But IMCC here, $5 stock, right now RSI is 39. It may be okay to buy a little bit and hold for a while. So with that, I got one more slide here which talks about a couple more companies. I will not talk about all of them, but the ones highlighted: CGC Canopy Gw, which is the bigger player, $9 billion company. They've done okay for 1 year, 46%. They got a lot of cash. I think this company will survive nicely. Just for pharmaceuticals, they're into pharmaceuticals. I think they also bought, I think it's West Pharma, if I'm not wrong. It's a pharmaceutical company. They also do a lot of medical cannabis. Yeah, I think I like this company a lot. It's a good company. They're not done great for 1 year. I think they can do well with the recent acquisition. And Kronos is again a good company. And as you can see here, they're not done great for 1 year. And, I think they kind of came down in 1 week. And they try to bounce back a little bit today. I think it's a $8 stock. It's okay to buy on the weakness and hold for a while. So with that, what we'll do next is we'll go into few of these stocks and do a little more deep dive and take it from there. First one is GrowGeneration. GrowGeneration is a pick and shovel type play. They provide retail hydroponic and organic gardening store. They have these stores, and they also provide some of these products for horticulture, organics, lighting, and hydroponics. I think it's a great company to play on. This pick and shovel type play. And as you can see here, they have turned positive earnings per share. That's the good news. And their sales is accelerating nicely. I love this acceleration here, as you can see here. And shares outstanding is also growing. I think, a little bit cautious, but since sales is growing, it's okay to have a little bit acceleration. It's not too much acceleration. It's okay. But I would watch this trend a little bit. I don't want to see too much share dilution, but at this time it's okay. From a major news perspective, looks like they launch a e-commerce platform. That's always good. You can do buy online and pick in the stores. And they also have some conference, and one of the top marijuana stocks per Investopedia. I think overall you can see here, they got some positive vibe going on here. And from a performance perspective, like we talked about, they got a $250 million in sales in trailing 12 months. Nice sales acceleration, positive ROE, no debt. It's always good to have no debt or very low debt. And they've got good institution support, very low float ratio, and they've done very nicely in 1 year. I think in 1 month and 3 months they're a little bit negative. That's why I feel like this could be a good time to do a start enter into this market, given the RSI is relatively low. And if you look at more statistics here, PE ratio is a little bit higher, but for stocks like this, I typically look at PS ratio or price to sales ratio. It's pretty reasonable. I would not pay too much attention to PE ratio. Earnings per share is positive. Companies making money. uh, I think 58 million shares available. It went up, from 2020, count. They got a lot of cash, 133 million, and some debt which is manageable. Nice volume. It's a liquid stock. You can trade in and out, and they got nice return on assets as you can see here, and they've done nicely for 2 years. It's not a one trick pony. Typically when you see a stock which does well for 1 year, but when it comes to 2 year and 5 year it stalls out. But in this case it's consistently done well in 1 year and 2 year, which is always good to see. So with that, I feel this is a good stock to buy. If you don't own this stock already, add to your position. I mean, buy some, and if you own it, add to your position. It's a great stock. Next is, we'll look at the technicals here. As you can see here, stock has done nicely. Earnings, stock went up. Earnings, stock went up again. Earnings, stock traded sideways, and now also stock traded sideways. And if you look at the RSI, RSI is becoming steady at this time. And if you look at the implied wall is low. It's very very low, 11%. So that tells you, you could even buy call option, maybe delta 70 or so. Or you could even buy, because it's a little bit lower price stock, $42. I would buy stock outright, so that way you're not into theta decay. As you can see in the chart, stock has been stalling out a little bit of late, so that's why be careful if you're buying call option, because if stock keeps stalling like this for a little bit, you'll start losing your money on your call option. So that's why I think it's good to buy the stock outright in this scenario. But if you want to do option play here, you could do maybe reversion to mean type scenarios. You could do some butterflies as an example. You could do iron condor, so that way stock fluctuates in a range here. You can profit in the scenario. And from a DMI perspective, I think they just crossed over the blue line here, crossed over the red line. That's a positive crossover. I think it's a good indication here. On the balance, volume is pretty steady on the higher side. That's a positive indication. And check-in money flow is also showing some positive trend. Now they're a little bit flat, but at least there is a good positive trend here. So overall, I feel like, from a fundamental and technical perspective, it's a good company. Only thing we have to watch out for is their share dilution, something to pay attention to. And I think it's a good company to buy. Next is a little smaller company here, 22nd Century Group, XXII, biotechnology company, develops plant-based solutions, and they also have some of these, cigarette research. That's why it may not be suitable for all the audience, because it's not really, all this cannabis. It's some folks don't want to invest in it, which is completely okay. And if you look at their earnings per share, I think it's got a little bit negative earnings per share at this point. And sales is good. They got nice sales going on here. And shares outstanding is also growing, but not too much. And as you look through here, I think they got some news coming up here. They are doing a disrupting the plant-based markets, which is always good. And they're also talking about some regulatory VP of regulatory talking about health disparities. I think they overall, I feel like they also have a revenue miss here. But if you look at the way they're doing, they're doing nicely. 5 year, 1 year, quarter over quarter from a sales perspective. Quarter over quarter is negative, but otherwise, 5 year and 1 year they're doing well. ROE is negative. Company is not making too much profit at this point. It's really losing, as you can see here. And little bit higher short float, which is okay. From a valuation perspective, a little pricey, 23, it's a little high, but not too high. And they've done nicely for 1 day, 1 week, 2 week, all the way to 1 year. That's why I feel like this stock is really moving nicely. It may be okay to buy some and hold it for a long time. They're off 24% from 1 year. And if you look at the RSI here, 53, which is okay to buy at this time. It's not, it's okay to enter. It's a good entry point. And if you see here, they've done nicely. They've done earnings per share is negative. They got 152 million shares available, which has grown from the past outstanding count. No debt, zero debt, which is always good, or a very low debt. Volume is nice. It's a liquid stock, and ROA is negative. So ROA, which is return on asset, and ROE, which is return on equity, both are negative, which is understandable for small companies which are growing. So they've done nicely for 1 year as well as 2 years. So it's not a one-trick pony. So with that, I would recommend buying a small position here and hold it for a while. From a technical perspective, I think they've done nicely. Very nice chart. Whenever they came down here, they always went up. It's a nice looking chart. They're always trending well. We have 9-day, 25-day, and 50-day moving average. They are kind of going nicely around 9-day moving average, which is always good. From an RSI perspective, very nice, steady RSI, and implied wall is very low. It's like 17.3%, but stock being very, very low price, it's $4.63. You are better off buying a stock and holding for a long time. Nice on the balance volume. I love this. It's increasing. And also from a DMI perspective, the blue line is above red line. That's a positive indication, but the um, gap between the blue line and the red line is very low. I would like to see this gap widen a little bit and blue line going even more higher. Check-in money flow is showing money is flowing into the stock. There is some positive upswing here. It's always good to see that. So with that, I feel like it's a good stock to buy. Very low dollar stock, and they've done nicely in the past. This performance might continue in the future also. Next is Tilray. I think everybody knows about this company. It's one of those famous meme type stock. They're into research, cultivation, processing, and distribution of medical cannabis. They're based in Canada, and they're doing negative earnings per share at this point, but there is some sign of improvement in the earnings per share. Nice sales. I love this sales acceleration. They've done nicely, and shares outstanding is also pretty manageable. It's not too much, too high. And from a news perspective, as you can look through here, they're talking about sundial growers. Tilray is rated overweight. I think overall, I feel like there are some good news, and that it's also talking about this meme stock. As you can see here, this is one of those meme stocks. But overall, if you look at the performance here, they've done nicely. A good sales acceleration. Net margin is negative at this point, which is understandable. Not too. I mean, there is some debt, but not too much debt. And they've done nicely for 1 week, 2 week, all the way to 1 year. And if you look through, they got good amount of cash and also a lot of debt, as you can see here. That's why price to debt to equity ratio is a little higher. I think this is probably a little higher on the debt side. Given it's a into research and cultivation, I think maybe it's understandable in this industry. ROE and ROA both are negative. That basically tells me company is not profitable yet, and they've done nicely from a return. If we see 1 year 253, 2 year 148, and 5 year 1126. So it's not a one-trick pony. This company can perform well over the long horizon. So with that, I feel like whenever this stock comes down a little bit, I would buy some. Right now, as you can see here, 1 day 4%. Maybe we can accumulate slowly and build a good position. If you look at the technical perspective, typical meme type stock went all the way up, as you can see here, came down. Now it's deciding what way to go. RSI is accelerating, that's good. Company is gaining some momentum. Low IV percentile. IV percentile is 12.3% at this time. I think it's okay to buy stock outright. It's a $18 stock, not too much at all. From a DMI perspective, there is a positive, the blue line here is above red line and the gap is pretty significant. That's a bullish signal here. And on the balance volume is going up. That's also bullish, good signal. Check-in money flow is pretty much flat to down, which may be okay, not too bad. So with that, Tilray is a good stock. I would recommend buying it on any pullback. Next, last but not least, is IIPR Innovative Industries. It's into acquisition, ownership, management of specialized properties, and they will lease it to experienced state licensed operators. Very stable business model, and they've done nicely from earnings per share. There's a nice acceleration. I like this. Nice growth acceleration. I love this too. And shares outstanding is going a little higher. Something to watch out for. But with the sales accelerating like this, this is okay, not too bad. And from a news perspective, I think it's Motley Fool is saying it's a favorite buy and hold. I agree with that assessment, and I think it's one of the good big things in the marijuana area. And I think overall, I think it's a good play here. They also play dividend. So performance perspective, company has done nicely, nice sales acceleration, nice net margin. It's good to see a company doing gross margin as well as positive net margin. So that's why it's one of the great companies. Debt to equity ratio is relatively low. That's good. They are doing positive on the ROE, positive on the ROA. That tells leadership is great. They are profitable at this point. RSI is 51. It's okay to enter at this time. A good entry point here. RSI indicates it's not overbought. Nice institutional support. I love this. There is some short float which will create probably a short squeeze. That's a good sign. And they've done nicely for 1 week, 2 week, and 1 month. So it may be okay to wait for a small pullback, or even now you could buy a little bit and keep accumulating slowly. And they've done nicely for 1 year. They've done nicely for 2 year also. So it's not a one trick pony. So with that, I recommend buying innovative properties on any pullback and hold it for a long time. And they also pay nice dividend, as you can see here, 2.9%, almost 3% dividend yield. It's good to see the sales stock is appreciating nicely, 108%. Also, they pay nice dividend. It's a very good situation. So with that, I think that will wrap. And from a technical perspective, very quickly, stock has been, doing nicely. Earnings, stock is went up. Earnings went up. Earnings went up. Nice trend here. Off late, it's kind of in the trading range here, as you can see here, and just trying to see what way to go at this point. From an RSI perspective, it's kind of stabilizing, and IV percentile is very low, 6.2. For these type of dividend paying stocks, which are pretty consistently stable like this, you would not go ahead and buy call option. You could buy the stock outright on a down day, or you could do some of the reversion to mean type techniques and sell iron condors or buy butterflies. You can do some of those strategies here because stock is kind of stalling out. You could even when the IV percentile is high, you could do even selling some put options, but right now you will not get any money for put options because it's a very low RSI. So best strategy for this stock is to buy the stock outright, or sell some iron condors, or buy some butterflies. So with that, I feel like it's doing okay from a fundamental perspective, technical perspective. DMI says right now it's a bullish. I think red line is touching the blue line. It's trying to decide what way to go. Check-in, moving average is pretty stable. On the balance volume is pretty stable here. So it's right now it's trying to decide what way to go. But on the positive side, check-in money flow is indicating the smart money is flowing into the stock. So with that, I feel like it's good to buy the stock outright. It's a great company. You can hold it for a long time. It will also pay you dividend. So with that, thank you very much. Happy investing and trading. Please subscribe.